Excellent. All right. Well, good afternoon, everyone. Thank you guys for spending some time with me this afternoon. Again, my name is Joe Boccella. I am from Chaikin Analytics, and I think the question on everyone's mind is, what now? Where do we go from here? What exactly has happened in January, and what are we going to expect leading into February? At Chaikin Analytics, I serve as our Director of Client Success, so my main responsibility is making sure that anyone who subscribes to our program has success with our program. Now, the types of subscribers, type of investors that we cater to, maybe you're managing longer-term positions, maybe you're managing shorter-term positions or swing trading, options or equities, you name it. Our program will be able to help you identify the likely movement of a given stock over the next 1 to 6 month time frame, as well as swing trading over a week-to-week basis. So let's go ahead and jump into it. Why is it worth your time to listen to the message that I have to say today? Well, think back to 2008. I'm sure we can all recall where we were. I know I certainly can. Where we were when the market began its crash back in 2008. I remember the first impression I had. I was working at a real estate firm, and I remember the CFO coming out and saying, "I can't believe the Dow is down 700 points." Right? Now, if you think about it, I'm sure we're all probably a little numb to that, right? We've seen the Dow swing hundreds of points so many times over at least even just the past 12 months, right? Quite a volatile market. Well, I'll never forget, that was my very first impression. Again, I was over at a real estate firm. Well, I eventually switched on over to Vanguard and, of course, got familiar with the rise in the market that we've seen in 2011, 12, 13, 14, the good old days, right? Well, 2015 has been a change of pace. Now more than ever, we need a product that's going to be able to give you serve as a GPS for identifying the right stocks to trade. Again, whether bullishly or bearishly, ultimately it's about finding a move in an individual stock. Well, shifting away from Vanguard, certainly with more of a longer-term retirement focus, I found Mark Chaikin, and I was able to strike up a partnership with him where he would allow me to join the company, and I would learn under his tutelage regarding how to invest over the shorter-term basis, right? So between him as well as our chief market strategist, John Schlitz, I learned a hell of a lot in this just a single year that I've been with the company. And again, I'm here to share with you our best practices for finding the right stocks. Now, if Chaikin is a familiar term, if it sounds like you've heard of this before, here are a few places that you've seen our products before. Bloomberg, CNBC, Fox Business. Mark was just on Fox Business for the closing bell. So you've seen Chaikin Money Flow as well. You know, if anybody watches Kramer, I know he mentions Chaikin Money Flow, representation of institutional funds on his program all the time. Well, this is ultimately, if you're familiar with money flow, we're going to talk about this later on, but this is one of the first initiatives that Mark Chaikin undertook in order to really make his name in the industry. If I'm not mistaken, we're actually going to be written up in Barron's next week as well. So, what we're going to talk about over the next 45 minutes, ultimately, we're going to go through our 5 steps for a winning process. We're going to talk a lot about the Chaikin Power Gauge rating, how it is a guide for you in order to do well in the market. We'll talk about Chaikin Money Flow and relative strength as well. Really what we're all here for, again, is the guidance in the market, right? What the heck happened in January? Where are we going to go in February? Okay, so we're going to spend a lot of time on number 3 here, talking about market and sector analysis. Buy and sell signals will be absolutely crucial, making you aware of significant trends in the overall market. But of course, I think what many of you are probably also interested in, and I have a few examples prepared for you, is how Chaikin Analytics can help you with earnings plays. All right, we actually have a really big play coming up after today's close. I'm going to share that with you when we're finished. So let's go ahead and get started. So I'm going to start out with the Chaikin Power Gauge rating. You might be wondering what exactly this is. Well, just like the gas gauge on your car, the Chaikin Power Gauge is a simple but reliable tool that allows you to identify a stock's likely performance over the next 1 to 6 month time frame. Now, what if you're sitting here saying, well, hold on, I'm a day trader, I'm a swing trader. Well, we can help you with the persistency of the Power Gauge rating. Obviously, if you see a stock that's done well over the past 6 months, and if it still has a bullish rating, as you'll see in a few examples in a moment, this is still a prime breeding ground for a bullish trade, as well as vice versa for a bearish example as well. This is completely objective and quantifiable. Mark spent 50 years on Wall Street. This is his 50th year as an investor, and he identified 20 factors summarized under 4 main categories that determine the likelihood of a stock's movement. You can see them summarized under financials, earnings, technicals, expert opinions, right? All of these factors are measured, weighted, and then ultimately summarized into a single overall rating, bullish, neutral, or bearish for your individual stocks. So all of the work, think for a moment. Go ahead and type into the chat window. I know we have a whole chat room available. I want you guys to utilize it a lot today. Tell me, if you spend more than 2 hours a day researching stocks, or you're sitting in front of the computer, go ahead and type in the word yes. Again, generally speaking, you find yourself, Monday through Friday spending more than 2 hours a day researching stocks, just type in the word yes. I want to get a sense for how much time everyone spends. Well, if you had the ability to take these, not only identify 20 factors, measure all of them, summarize them, and determine an overall rating for a stock, let me know if you think that would be a good solution for you. All right? And we're going to talk about how this is a reliable gauge for you. I love using Apple. Apple's the most frequently requested stock from short-term traders, mid-term traders, long-term traders, your parents, your friends. Everyone talks about Apple, right? Everyone has an opinion on Apple, right? And that tends to be a problem, quite frankly. The reason why is you need an objective approach on an individual stock, especially one just like Apple here. So let me tell you about it. You can see I highlighted here back toward the second quarter when Apple started losing a bit of its luster, right? So you can see the price movement ultimately making a move right on down, losing the growth you've experienced. But look down at the bottom of the page, this green and yellow indication here. What is this telling us? Well, obviously we're bullish on a stock like Apple for quite a while leading up to 2015. But what happened right around May and June? It started losing its bullish power gauge rating, started trading sideways, telling you that danger is ahead. Well, this is a wonderful indication for a longer-term trader to exit your long position, right? Being concerned about its potential growth going forward and find a new opportunity. Or, of course, if you are a short-term trader, you have a clear swing trading opportunity available to you by using the different technical factors we're going to tell you about today. So this is one of my favorite examples. You can see the turmoil that Apple's gone through. And I think everyone knows Apple's in an awkward position right now. But again, we're not just talking about January, December, November, October. I'm talking about almost 12 months ago, we had this way ahead in terms of the performance for the biggest stock out there on the market. So that's one stock, right? I could stop there and tell you all about just how one stock out of the thousands, how our power gauge rating works. But obviously nobody would believe me. So we do some back testing here. What we do, what we're interested in order to determine success, is that we want to see that our bullish power gauge ratings, our stocks with bullish ratings, outperform the average stock. And we reference the average stock in the Russell 3000. So what we've seen since we started our back testing back since 1999 is we're comparing bullish rated stocks and bearish rated stocks against the average stock in the Russell 3000. And you can see in both cases, whether you're bullish, whether you're buying and holding, we're guiding you to growth. Whether you're bearish, you're shorting stocks, you're buying puts, we're helping you find stocks that are going to underperform the overall market. This eventually led to Mark Chaikin striking up a partnership over with the great people over at NASDAQ. With the success that we've seen over a few decades now, we said, what would it look like if we took a NASDAQ index and we actually had the power gauge rating manage those, right? What if we had the Chaikin index, the power gauge rating automatically managing some of these groups? What kind of results will we end up seeing? Well, what we've seen over the 18 months we've been testing this, simply enough, your large cap, your small cap, your dividend fund, all from NASDAQ, each one has improved their performance by being guided by the power gauge rating, those bullish rated stocks. Now, these are just hypothetical indexes, right? We just wanted to make sure that this worked. Well, as you might expect, this led into more of a material opportunity where we actually just struck up a partnership with First Trust Bank. We actually have a live unit investment trust that is managed by the power gauge rating. In fact, we're launching a second one here in the first quarter as well. So this is leading to, again, money management opportunities for us, all guided by the power gauge rating that I have to share with you here today. So let's keep our focus on individual stocks. Again, if you want to hear more about the unit investment trust, feel free to reach out to me. I'll provide my contact information in a moment. But for right now, let's keep the focus on individual stock trading. So when you pull up our program, how do you know what opportunities to buy? What are you interested in here? Well, we have our definition for a classic Chaikin bull, right? We're going to be led by the power gauge rating. First and foremost, we've got to be bullish. We've got to anticipate that growth. We'll complement our analysis with relative strength, with Chaikin money flow, these technical factors coming into play, and of course our attention will be drawn to stocks with a buy signal. The example I want to share with you today is SCG, utility stock that I've been watching for the past couple of weeks. Now, you might be saying utilities, there's nothing exciting going in utilities, there's just a defensive sector. Well, take a look at the growth that we've been experiencing here, and look at how successful the individual stock ratings have been. So the key thing, we're going bullish on this stock back around October, right when the market's kind of rallying a bit. Well, we're going to look at the SPY in a few minutes, but overall, look at the growth that has continued here for SCG. And again, reference down here for relative strength, how the stock's performing versus the overall market. You can see you're going from underperforming in red here to outperforming in green. Overall, with money flow, which again we're going to address in a few more moments, and of course the confidence of a maintained power gauge rating. If you notice at the top of the page here, here are your 4 main categories in summary, with the overwhelming majority of them bullish. Now, the expectation that we set is to follow a growth pattern such as the Wyckoff here. So we're looking for a series, of course, of higher high points and higher low points. So again, longer-term investors can follow this as a barometer. Shorter-term investors can identify a throwback point for reaccumulation as an exit. Bearish approach is quite similar. Looking for a bearish rated stock, persistently bearish stock, right? You're looking for relative strength to be underperforming the market. You want institutions to be selling this stock, right? You want to get your piece of this stock before it makes its next break on down. Take a look at Acadia today. Perhaps if you have some other research tools available, maybe you're already a Chaikin Analytics subscriber, but pull up Acadia and you can take a look at this stock and how consistently it's been underperforming. Now the growth pattern here might be a little misleading, but overall, we've been bearish on this stock, very skeptical on it since the end of July. You've had I'll give you 2 opportunities, 2 out of the 3 signals here, as an opportunity to short the stock and ride it right on down. Overall, why do we maintain our bearish power gauge rating? Financials awful, earnings awful, technicals and experts both in very poor condition, and of course we're maintaining our power gauge rating here. Just like with our bullish approach, we're also keeping a Wyckoff pattern for the opposite direction. Again, if you're looking for a longer term play, it's available for you here. If you're looking for a short term, look for the technical indicators in order to identify your entry as well as your exit point. So this is the power gauge rating leading us to significant performance in a stock. Again, either bullishly or bearishly, whether you're shorting, whether you're buying the stock, whether you're swing trading, doing options in either direction, you can find the movement that you need in order to be successful in a trade by identifying the right stock. So let's go ahead and fine tune our analysis a bit here. Certainly we provide more in our program than just the power gauge rating. We do have relative strength and money flow and overbought and oversold, also known pretty familiar as RSI. But we have all of these timing factors here to help you identify your entry point as well as your exit. Tell me a little bit. I was looking at the chats earlier. I saw a lot of yeses for the previous question, but let me know if finding the entry point or the exit point is your greatest challenge. Because I know for all of our subscribers, when they first join our program, they're constantly saying, I can't find the right stock, I don't know when to enter, and I don't know when to exit, and I need a solution. So in my support programs and my daily onboard sessions, I'm constantly referring to how to identify the right stock with our screener. And I'm using these technical factors to find your entry point. So go ahead and chat in. Let me know if you want me to emphasize going forward for the next couple of examples. Do you want me to focus more on finding the right entry point or finding the right exit point? I'll give you a second, and the majority that I see, I'll go ahead and focus my attention on here. Let's see. I'm seeing entry, couple exits. And all right, let's pretty much 50-50 here. Okay, cool. Let's move right along. So I'm going to emphasize again, I have a few examples here for you to identify the right point to strike. I've showed you bullish stocks, right? But I got to show you the right point to open your position. So we're going to talk about Chaikin money flow here first, right? So what are institutions doing in order that I can identify the right point to make a move? So I'm looking at First Solar here today. First Solar is a fantastic stock that Mark Chaikin's been talking about for a few weeks now. Now, I want you to keep your attention right here at this point back at the end of November, right? Now, obviously, if you look down at the bottom of the page, we've been bullish on the stock since October, so you might be wondering why wait till November. Well, the key thing, again, is you're looking for persistency, all right? So you have ultimately the stock doing well with its power gauge rating, and you can clearly see why it maintains its bullish power gauge rating today. You've got relative strength going from negative up here to positive territory. You've got institutions going from negative to positive, and I'm going to emphasize this, staying positive here. And the key thing, again, something you might be familiar with as an RSI here, is that you're looking for an oversold position, an indication that the stock is currently undervalued. You could buy the stock a few days before and weighted on down, but imagine the emotional drain that you go through, right? Imagine the frustration of buying such a bullish stock, a stock that's done so well, but having the price go down for the first few days. It's an experience that we've all had, right? And then you sell out of the position at a loss, and then the stock picks up its momentum, and you completely miss your opportunity at a loss. Well, the key thing is looking for persistency factors here and ultimately picking up the momentum with your entry point. And ultimately, you can see how that takes place by using money flow transitions and relative strength transitions. All the while, maybe you are managing a longer term position, though I'm getting a feeling I think a lot of people are focused more shorter term. You can come back for more, again, right around this point, again in November. You're back here for another swing trade, in and out within just a couple of weeks, if even 2 weeks at all. And you can see all of these same factors stay bullish. Power gauge rating stays bullish despite such a rough market. Now, what I also want to show you here is keep in mind, we're going to do, this is kind of a warming up for our market analysis here. But remember that with money flow, we're following the behavior of larger institutions. What we're looking at right now, I did my best to kind of provide a screenshot here of money flow from the S&P 500. So are institutions buying the market or are they selling it, right? Well, here's what's going on for the most part. Again, I emphasize here that money flow stays positive. Well, back in the late fall, early winter, or October timeframe, you had institutions build up and make a move in the market and then ultimately sell off, and now they're pretty much on the sidelines. Well, take a look again at First Solar here. How's First Solar doing? Consistently positive the entire time. This is a wonderful breakout opportunity. How about a personality change? I just started alluding to that with relative strength and money flow. So one of the characters we like to think of course, is Jack coming through the door with an axe. And so how do you spot that transition before it already takes place? Well, here's an exit point for those of you who are looking for an exit opportunity. The example I have for you here is AIG. So financials, I know in the first half of the year actually did pretty well, considering the overall condition of the market. Consider, for example, here with your relative strength, very poor condition. You have the stock making its build up, and you want to hang on to the stock obviously as you go through your correction back in the, and then leading out through September. You see the oversold position, so you're looking to gain back up more in your opportunity here. The key thing though, as we move along to December, right? You see how the stock's struggling to make a higher high point, just like the overall market, and pretty much like what we've experienced for the better part of about a 6-month time frame. Now, you don't want to sell into weakness. Rather, when you see the signs coming, when you see institutions pulling their money out, just like we have identified here, and you see relative strength slowly trailing off, again, you don't want to sell into a weak market. Rather, what you're going to do is wait for an overbought position here because you're getting in all this rally. And that, of course, leads into an overbought market, where, like we're going to see in the S&P 500 in a few moments, and ultimately the Fed decision on the heels of to raise rates. It's taking obviously a pretty strong hit for the overall financial sector, as well as, of course, all the implications with the price of crude oil swinging back and forth. And so ultimately, you're avoiding these lows that we experienced back over the summertime, and instead you're getting out right at your high point. If you've ever seen a webinar from Mark Chaikin or Sandy Chaikin, we really love pushing testimonials. Again, I can talk all day long about how wonderful this program is, but it means nothing unless you have an objective point of view. So I started taking some emails that I got right from my inbox, and I just wanted, as much as again, obviously I'm hiding this gentleman's personal information here, but this is a screenshot right from an email I got right before Thanksgiving. And I'm going to read through it real quick. Since I've been using Chaikin Analytics, I've been able to clean out my losing stocks and increase my gains considerably. I'm a very conservative investor, a swing trader, and your webinars in the program have given me the confidence needed. You're going to see that term come up a lot here, making a confident decision, right? It's also given me a structured way to invest and make profits instead of losses. So this is a really cool message that we've received a few times. I'm a pretty big fan of getting these types of emails. And I will say this too, remember, my role here at Chaikin Analytics isn't to do sales. It's to support our current subscribers, right? So my whole job is dedicated to making sure that when you join our program, that you can be successful with it. When I get to see these, especially when people are citing that they're attending my webinars and going through all the support content we provide, it's a great point of reference that I can use that tells me that I'm doing my job right. So, okay, so that's your stock analysis. That's your technical analysis. let's go into the market. Because I think, again, based on the title I had here, what the heck happened in January? What in the world can I expect in February now? Well, let's go ahead and into the market and talk about sector analysis here. This is one of my favorite topics. Now, we believe philosophically that you want to go with the trend of the market. I'm sure you all agree with that. Let me know. Tell me this too, right? So I asked you a few minutes ago if you spend 2 hours or more researching stocks. Tell me if you spend 30 minutes a day, right? Just 30 minutes a day. Tell me if you spend 30 minutes a day analyzing a major index, maybe the S&P 500, maybe the NASDAQ, maybe the small cap or large cap Russells. If you spend any more than 30 minutes a day analyzing the market, go ahead and just type in yes again. I love getting, obviously the audience participated. I've done a few webinars before. I've been doing webinars for Chaikin for a couple of months now. And the first couple of ones, I would just go ramble off on a random topic and it wouldn't be relevant and I wouldn't get really many responses because I'm talking about a completely different topic that's not really relevant to anyone. What I like to think I'm starting to come along, and I think it's pretty hard to not get anyone's attention when you're talking about the overall market. But I just want to make sure that this is really where our interest is before I really spend too much time on something. So I'm going to take a quick look at the responses here. I'm very curious to know. Seeing a whole bunch of yeses. Very cool. Awesome. Well, I'll tell you what, if you enjoy doing that in 30 minutes, I'm going to show you how you can do it in even less than that. So we've been talking about our technicals, the price chart. You can see Chaikin money flow. You can see overbought, oversold. All of these apply to any major index that you can think of. Now, we use surrogates in our program through ETFs. So we're looking at the SPY ETF to get a sense for how the S&P 500 is performing. Well, I set this up so that every day when I log into Chaikin, the very first thing I look at is the S&P 500 because, again, like a rising tide lifting all boats, a rising market raises the price of most stocks. And then, of course, in an opposite direction, I think like we've been feeling it, especially lately, is a sinking tide sinks most boats, right? So in that case, we're going to go with the trend of the overall market. So we're watching as we currently stand right now with, as Mark describes, a W-shaped bottom, right? Now you'll see that this took place back over the summer. I'm going to tell you more about this in a minute, but notice how we're currently leading into an overbought position. Remember, when we look at those bearish examples, when we look at exit points, when we look at shorting opportunities, the key thing is getting your timing down. We're going to look at Wynn Resorts later on in the presentation, and I'll show you that despite being one of the worst stocks of 2015, there are times where you don't want to be shorting that stock. So we'll go over those examples in a minute. But the key thing is overbought, you're thinking bearishly, just like we have over the past few months. We're looking at a 12-month chart right now. And ultimately, of course, same thing that led into the last correction. So we're going to use these technicals. Obviously, with institutions sitting on the sidelines, it doesn't really do us much good. So again, we're going to focus on these. When you pull up the power gauge ratings, right, you might be wondering, well, where's the power gauge ratings for your ETFs? They're coming in the first quarter of this year. So what good does Chaikin do for us for market analysis? Well, all an ETF, I'm sure you all know, is just a whole bunch of grouping of individual stocks that make up a reflection of a given group. Well, what we use here ultimately are our spider sectors. They're all default added right into your program. So when you go to your ETFs, you go to your sector groups, you'll see all 9 sectors plus the S&P 500, and included in them will be ratios for how many bulls versus how many bears there are within each group. What we're interested in knowing are those ratios. So if I look on the left-hand side of the page, you might be wondering where I pulled that utility stock from before. Actually, 2 of them I've used already. Well, I'm pulling them from the group that has 12 bullish stocks and 0 bearish stocks, okay? Financials, ultimately, again, getting rocked by the overall market, losing their power gauge rating down to 11 bulls and just 14 bears. The message that's a clear takeaway here is look at the overwhelming majority of stocks here. Remember, the S&P 500 is included here. I have it highlighted. The majority of these groups are more bearish than bullish. So what you'll want to watch for when we start to come out of this whole correction or perhaps even bear market yet, you'll want to see an improvement of these ratios before you can really put your feet back on stable ground. And then finally, the third thing that we have for you is expert analysis. Don't take it from me. I don't have a CFA. I don't have a license or anything along those lines. I've got a fraction of the experience that Mark Chaikin and John Schlitz have. So what we're going to do is we're going to put John Schlitz and Mark Chaikin right into your computer screen through our Market Insights articles. Mark Chaikin writes his weekly article. It's posted every Sunday evening for all of our subscribers. John Schlitz writes his morning Insights article. So if you want day-to-day analysis from a especially technical point of view, this is all available for you here at your disposal, and it's all focused on the market and then drills down into sectors. And of course, we'll feed you a few individual stock ideas as well, which we're going to take a look at later on in this webinar. So let's go ahead and put all this together, right? I haven't been too detailed about how we analyze the market. I showed you a couple things, but I didn't really tell you how to do it yet. So again, I'm still not going to tell you how to do it, but what I am going to do is I'm going to have Mark tell you how to do it. So here's an excerpt that I took right from Mark's analysis here, right? So he was telling us back over the summer that since 2008, any correction consisting of, or any pullback in the market of 11% or greater requires a W-shaped bottom before you start to see potential rally, right? So let me go back here. You can see the market coming right back down in this W shape and breaking right on out. Now, of course, we met another double top here, and we came right back down for another correction. But overall, like I alluded to before, we're looking for this W-shaped bottom to begin. And it definitely seems to be the case right now. And how will we know when that W is coming to a point here? Well, overbought, oversold is going to be a very nice guiding factor, just like we're currently finding ourselves right now. But Mark's going to be right back here to tell you what points to look for. So, for example, for the midweek, late week advance, I should say, looking for a point of about 1950. On the ETF, you're looking at 195, right? So you have this point here, and if you're thinking right now, all right, so you're telling me that it might be a little late to open up a bullish position, that very well might be the case. Rather, what we're anticipating, right, with the overall market getting overbought, now that we're making that second leg of the W shape, you might be thinking bearishly, because that's definitely what we're at. And that's all based on the technical factors here. Now, you might be wondering, how low will the next leg go? Well, take a look over here, 1800, 1820 area for a potential move down for a test, right? So you've got this price point, and you've got the next point to identify here. Now, longer term, what about if we're trying to determine, are we actually in a bearish market, or are we just going through another correction? Well, you have both of these price points cited here, 1710, 1730 as a possibility, while bears are looking more around 1600. That would really hurt. A few other points here. Ability of the market for this week. This is commentary right from Mark regarding this very week. Of course, we ended last week, or I think it was middle of the day Wednesday. We were down to about 1820 area. Well, since that point, midday, we've rallied and obviously had a great end to last week. This week's been kind of back and forth. I haven't seen weekly where we currently stand, but we're kind of hanging on to this profits, which is exactly what Mark was looking for the market to overall do for a potential breakout. So we'll see ultimately what today brings. I know today in itself has been quite a volatile day. I see that as the time that I put this presentation together, we were at about 1890-ish area. So not quite getting to that 1950 point. But overall, you've got the price target in mind. Here it is. Here's what we were looking at as of today. Okay. So what do I do once I have this sense for where the market is? Well, start drilling down into individual sectors as well. So what are we talking about here? You've got the energy sector, all right? Everybody's speculating regarding where the price of oil is going, where is crude oil doing. Well, the key thing is being able to identify that right now, with energy having not a single bullish stock, we have yet to find the bottom, right? Just like I mentioned down here. Over the course of the past 12 months, not a single day has gone by where relative strength was once better than the overall market. And so the key thing that I want to focus on here is that don't go bottom fishing. Don't go speculating for how I can find the bottom in energy, right? That is not really a very enticing approach, especially when all the evidence is against that type of outlook. And again, what we're focusing on here is the lack of even a single bullish stock compared to, what is that, 28 bearish stocks. Kinder Morgan is where you can take advantage of an individual stock move. Now, I know today Kinder Morgan's doing pretty well. That's totally fine because we've made our profits from plenty of opportunities over the course of the year. So, for example, by using the assistance of our overbought sell signals here, you can identify the moves down in the stock. After some time, eventually another move down, and then eventually another sharper move back in December, all complemented by the overbought signals here. Now, my belief is that when you get to know our charts, you get to know our signals, right? There's nothing in our charts that a signal doesn't tell you. But that's why our support sessions are here, to help you understand what these different technical factors are telling you, and ultimately also to help you understand how each one is constructed. So that's our market analysis. That is really what guides our approach for an individual stock. Again, hint, hint, we're approaching an overbought position. You might want to take advantage of some of the screens I'm going to show you in a few minutes when you subscribe to Chaikin. So let's talk a little bit more about our buy and our sell signals. I just told you that a lot of our signals relate right back to the indications on our page. So how you can access them. Again, 6 categories in total: oversold buy, momentum, relative strength, money flow. The ones that I really enjoy are the oversold buy, overbought sell signals, especially when the market is at its peak point. Relative strength, also very helpful if I want to get in there for a really short-term play for about a week-long move. Activision Blizzard is a stock that has been one of our main winners this year. I know everybody's been following, but we've been really bullish on it for pretty much the past 12 months. Mark Chaikin, Sandy Chaikin, excuse me, hang on for a second. Mark Chaikin and Sandy Chaikin have both really spoken a lot about ATVI here. It's a stock that's consistently doing well and maintains its bullish category. That's why you want to keep the overall balance here. Something I want to zoom in on too, you might find pretty interesting as well. So I mentioned before that we measure all of our factors and we weigh them. Well, take a look at financials, earnings, technicals, and experts, right? You might say, well, 2 are neutral, one's bullish, and one's bearish, right? Why is the overall rating here bullish? Because we're weighing each one of these categories. We have more emphasis perhaps on earnings and financials rather than what's going on in technicals, maybe even expert opinions. That's part of our IP, our ability to balance these different factors and still determine that overall we're expecting growth from this stock is one of the main benefits that you get by following the power gauge rating. Wynn Resorts, so I told you we were going to take a look at Wynn Resorts here. I remember I spoke with a few of our subscribers. They were early on in their term with us, and this was right around when the market was rallying out of the correction. So it was late September, and so I mentioned earlier that even a stock like Wynn, which if you look down at the bottom of the chart here, was bearish every single day since over that 12-month time frame, and I'm pretty sure it's still very bullish here. But you'll notice, take your pick of any one of these signals, right? But in particular, what I want you to focus on really right here is when we don't want you to be shorting this stock. You can see how the price shot right on down and eventually rallied right back up with the market, right? This is an example for what I just circled of a bullish trade, a bearish trade in a bullish market. This is exactly what we want you to avoid. Now, some of you may be trading full-time, some of you may be trading just part-time. So where can I get a summary of some of these significant changes? Perhaps alerts. What about alerts and signals for individual sectors? How can I find opportunities for me to trade? I'm showing you some individual stock examples, but I also want to show you how you actually find them. And you can do this in one way, in particular, by using our panel view. So this is a great way where you get to see some the performance of individual stocks intraday, right? So what we're looking at right now is the condition of financial stocks that are on a pretty good day today. And if you're wondering which ones have triggered buy signals, which ones might be a good opportunity to buy into, you'll see them all summarized here within our alerts window. Now again, you want to be considerate of the trend of the overall market. So you're seeing some bullish trends overall for financials overall as a whole. But again, if you are looking for that opportunity, maybe you own some of these financial stocks. I know we've been getting a lot of questions about, should I just sell out of my positions and liquidate, or should I hang in there and perhaps sell at a higher point? The key thing is that the more bullish trends you see, the more faith you have in an individual position. Another way to find opportunities, this is my favorite way to do it. We've introduced a number of upgrades to our program, all free of cost with our subscription. Now, with Chaikin Analytics, what we're able to do, we have all these different technical factors I've been telling you about, but you now have the ability to screen and scan through all of these different factors as well. So what we mean by this is, here's our screener. We just introduced it again I want to say it was about November of last year. And what we're going to use through this program is, remember what we've spoken much about today, our persistency with our power gauge rating. Well, if you're wondering what stocks out there within the Russell 3000 have bearish persistency, simply switch to bearish persistency. You want to make sure a stock's falling below the long-term trend as well, and take advantage of our signals. You can find a few examples for you here. Here are a few examples of stocks that I found back in December. So at the end of the at the end of December, end of 2015, noticed that the market was overbought, feel free to look up some of these stocks here, the ticker symbols available for you. Each one of these have plunged since that date. You can even take a closer look at when they became oversold and how they tailed back. That oversold indication after you open a position is a great way to identify the point where you want to exit your bearish trade. The depreciation in the stock is likely to be halted or perhaps reversed. But the key thing is identifying when that momentum is building up, and then of course at the same time looking when you can secure your profits. Esterline Technologies is a great example. This is one I want to tell you a bit about. It's a stock that's initially bearish power gauge rating, below long-term trend. I believe it was reporting earnings right around this time in May, and ultimately came right in and just plunged right off a cliff and has continued to do so since. We got a pretty cool email from someone back around that time frame, June. $8,000 in 2 days. Just want to thank you for the word on ESL. Bought puts on Wednesday for $1,700, sold them in the morning for $10,200. That's not too bad. Now, let's jump into earnings, right? So you've pretty much seen the program to this point. You've seen our power gauge ratings, our technical factors. We've got how to break down the market as well as an individual stock. We have signals to complement your assessment. Now let's really start getting specific with the type of strategies you can use, and we're going to talk about earnings here. So again, I'm going to go right back to my screener. So this is all right within Chaikin Analytics. This is part of the subscription that I'm offering you today. And when you pull up the program, less is more. The less criteria you enter, the higher quality results that you'll get. One of my ideal ways to look for opportunities is to not only look for a stock that's bearish, but also look for a stock specifically within our power gauge rating that has done very poor with earnings. Because again, our power gauge rating is evaluating much more than just how a stock is done with earnings. It's just one portion of our overall rating. So one of the worst mistakes someone can make is to short a bearish rated stock on earnings, because you're only accounting for 25% of the factors that influence the overall market, the overall stock, not the remaining 75. And that's definitely worth taking into consideration there. So when we drill in on the power gauge rating, its performance with earnings, and ultimately, if it reports earnings in the next week, you can find them all at your disposal here. Options play. So this is really cool too. So one of the other major enhancements that we made to our program is we partnered up with a company called Options Play. We have a lot of subscribers who trade options. Constantly people are saying, look, one example would be someone who's retired, right? They've got plenty of money saved up for retirement, but they still want to make some extra income. And so they'll do a few short-term trades, and really they just kind of enjoy investing. So it's pretty cool, actually. Well, what we've done here is that we have a Fortinet here. This is our stock of the week pick. Mark brought this one up. So stock of the week here is ultimately trading at around $27.75 at the beginning of the week, due to report earnings at the close of today, so Thursday. Stock is rebounding from a short-term oversold condition and is a great put candidate on further strength at the 28-29 area. So Mark's looking for an opportunity as it's pumping up in value leading into the earnings report. Some other details. Stock has gone from being excessively overvalued and lower expectations by analysts may be easier to beat, but if guidance is poor, expect the stock to make new lows in the $20, $22 area. So it's a perfect setup here, and you can see overall for the stock. I know right now with the earnings rating here, giving you middle of the pack here, but getting the assessment right from Mark as you're anticipating a switch in its performance is a great opportunity for you to have. Also, for example, here's Facebook. So I noticed this. I gave a webinar yesterday around 4:15, and I was sitting in the conference room where I am right now. We had Bloomberg on it. I really like Bloomberg. I think they just give you a much better analysis than some of the other channels out there, I guess you could say. And I saw that reported well. It did actually, I think it was up as much as 5% in after-hours trading when I was looking at it. And I was curious, and I was like, well, I know we haven't really been too hot on Facebook here, but at least with earnings, I was curious to know how we were doing there. Because I know financials are really weak. That's one of the big things that weighs down Facebook for us. Well, I looked up earnings, and sure enough, we were really, really bullish on it. And I just so happened to look at it again today before today's webinar, and I saw it was up, including after-hours trading from last night, up almost 15.5%. So even with the power gauge rating, again, when it comes to earnings, if you drill down specifically on that earnings rating, you can find the next opportunity to trade on them. And here it is again today. So this is the screenshot I was looking at last night. Yeah, I was up about 5.5% when I was looking at it then. So again, earnings are really cool. I know it's a very unique strategy. It's a lot of swings going back and forth, and I know it's can be a great opportunity to cash in, but at the same time, I know it is very risky, but we've had a lot of people who have done well with the program. Here's an example of a response that we got. I more than paid for my annual subscription in the first 2 days, and then in the second week, made over $15,600 in 3 earnings plays. So this is the type of benefit that you can get when you're finding the right opportunity. I think you all know how to trade on earnings, but being able to find the right opportunity is really just as important. Yelp. So again, Yelp is a stock that really has had an awful 12-month run. I really don't use Yelp. I know I've heard of it, and I know of a lot of people who reference it, but I really don't use it. I don't rely on it. And the power gauge rating kind of agrees with our outlook here. So there was an example back in July. I think this is our big heavy hitter here, if I'm remembering correctly. Right around when I point out the signal that, yeah, this is it. So we had a subscriber send us an email the next day. This was Mark's stock of the week pick, and he told us in the first 2 weeks he was using Chaikin. He already had more success than he had in the entire first part of the year. Remember, this was back in July. And then he emails us saying, ultimately, big winner, risked $7,000, netted $17,400 in the morning. Fantastic return. He even went as far as sending us a screenshot from his trading platform. So we were thrilled to see this, and you can see how easy it can be when you're being guided by our program. So this is a summary of our options program. I'll demonstrate this in a live example in a moment. We also have our screener functionality. We've getting a lot of great feedback. I know toward the end of the year it was a really good run. I know there's plenty of people who are kind of getting scared out of the market right now, but again, the key thing is you've got to have the right tools in order to navigate it. I think of Chaikin Analytics, it's kind of like the GPS on your phone. You know, I drive to and from work a lot, and I know how to get to and from work, but what I'm really interested in is avoiding traffic. I'm interested in avoiding a road closure. I want to find the fastest route to get home, and I need that navigation. You know, yes, you can listen to the radio and you get some details, but you need turn-by-turn navigation real time. And that's exactly what Chaikin Analytics provides to you in the stock market. So those are our 5 steps. These are exactly what we look for in order to succeed in the market. Again, this whole process, if you still have some questions about it, we're going to do a bit of a Q&A in a minute, but I want you to remember that we provide a full support program. Actually, just expanded my team this week. We brought on a great associate. She's learning the program right now. I think she's listening to some sales calls at the moment. But what we're building up is a team to help people understand how to get the most out of the program. Again, we have a lot of different investors in our program. We have longer-term investors, we have financial advisors, we have wealth managers. We also have individual investors. You know, we have people who are just doing this part-time, like I mentioned before. You know, they work full-time and they're just kind of managing the portfolio here and there. Some people are just using a chunk of their capital to manage their own portfolio and take control. That's a big theme that we have. And so our dedication to you is that we're going to be holding support sessions. We do daily workshops at 2 o'clock in the afternoon Eastern time. We record each one of these. We do option-specific sessions on every Tuesday and Thursday, as well as pre-market analysis sessions every Tuesday and Thursday morning as well. All of these sessions are recorded, so I'm sure we will be able to find some time in your very busy day, either live or at a recording. It's a lot of great content that you can consume. And of course, the live sessions, we use the same exact program we're using right now, GoToWebinar. We use these for all of our sessions, so you can chat back and forth with me as we go through detailed examples. This is a pretty cool one. Another email I got back on January 6th. Nice start to the new year. A #1 source for go-to daily advisory information, and of course the platform is amazing. Best of breed and getting better every day. And again, we're going to see that in the form of power gauge ratings for our ETFs. Let's see, another one. Next steps, that's right. So where do we go from here? I give you a lot of really cool tips. I showed you where the market's headed, but what do you do after the next week or two? Like, where do I go from there? Because I don't know the next time I have a webinar scheduled. I do a lot of stuff for our current subscribers. It's not often that I'm kind of doing public demonstrations. So you might be wondering, well, you know, where can I go from here in terms of that W shape that we were talking about in the market? And, you know, what if we do see a slide back into a bearish market? What kind of expectations can I get from there? Well, what we want you to do, I'm going to make you a special offer to subscribe to Chaikin Analytics for the year, and I want you to reserve your free professional training session with me. The next one I'm doing is going to be tomorrow at 2 o'clock Eastern Time, just for our subscribers. So it is only available if you do subscribe to Chaikin. But also for today, right now it's about 3:30 Eastern, 3:15 Eastern Time. The sessions that I've hosted today are available. They are recorded. They're on our website, our subscribers' website, I should say. So you can get in there. You can see the content that we spoke about. I did a pretty in-depth analysis of the market this morning during our 8:30 pre-market session. So you can check that out as soon as today, and then of course we'll put it all together during our onboard session tomorrow afternoon. We are also we're also doing our daily and weekly market insights articles. Again, these are right from Mark Chaikin as well as from John Schlitz. All of these, again, made available for all of our subscribers. Personal coaching sessions, they do one-on-one sessions with everyone, just kind of put all of your strategies into context as well as the overall market. And then, of course, we're going to help you take the next steps and take action on your nest egg. How do you access Chaikin Analytics? Well, obviously right now we're all on the computer, I'd imagine. So if you have a desktop, you have a web browser, you can access Chaikin Analytics. We do also have an iPad available for anyone who prefers to use a tablet, and I should specify that is just for an iPad. But we do have a full app with a majority of our functionality on there. I think the screener's not there, but we have plenty of other content available for you. Everything's available on the desktop.
Joe, I hate to break in, but we are about out of time. If you want to go ahead and wrap things up.
Absolutely, my mistake. I'm sorry. So here's the offer that I have for you: $17.50 for a full year to Chaikin Analytics. You can go to chaikinanalytics.com/trader. Again, for chaikinanalytics.com/trader. Sorry about that. I thought I was under an hour long here. My mistake here.
No worries.
Sales at chaikinanalytics.com, 877-697-6783. Expires Friday. Let me see what else I have here. A few other testimonials. I know they're all really fun to check out. But again, if you go to our sessions, you can check out everything that we provide for you. So with that said, if you think about the benefits that you're looking for overall, think about us for guidance on the market, for where to head going forward, and ultimately how to find the right stocks. So thank you all very much for listening, and again, I'm glad you guys stuck around. Have a great afternoon, and we'll talk to you next time.